Over the last 100 years, we've seen the markets move something like this. Obviously, this is not an exact depiction, but something like this where we've seen booms and we've seen busts. But besides the booms and busts, we've seen the markets grow overall over the last 100 years. But do you know what ends up happening when you look at the news? Anytime you start to see one of these downturns, you hear that the world is ending, you need to sell, you got to get out while you still can, because things are going to get bad and they're only going to get worse. And this creates a lot of panic, it creates a lot of fear, and this gets people scared, and so they start selling. And then when people start selling, well, then more people start selling, because then they see the stock price fall even further. You create the self-fulfilling prophecy, and the people get more scared, which then causes markets, stock prices especially, to tank. Because remember, the stock market is emotional. You can buy and sell a stock in an instant. It's not like real estate. I mean, if I wanted to sell a piece of property, it's going to take me a few months to get this property listed, sold, and completely done with. But with stocks, if I see a headline and I get scared and I sell, I can do it in a second, which is what can create that panic and create that fear. But it's the same thing on the other side, because then when you hear, oh, this stock is doing great, you don't want to miss out, this is booming, everybody's getting rich, you have to come in and buy now. It gets people excited, and then they start to buy. And why are people buying? Well, you're buying because you heard your Uber driver make $10,000 off of this one trade, and you want to make that $10,000 too, so then you come in and buy, which then pushes the stock higher and higher and higher, and then you find out that it becomes overinflated, and then it starts to come down, and now you freak out because the stock that you thought was great, this investment that you thought was great, starts to fall a little bit. Now you think, why is it that every time I make a stock purchase, it starts to go down as soon as I buy? You've heard people say, buy low, sell high. But what ends up happening to so many people is they end up buying high and selling low, because instead of trading or investing on financials, they're making investment decisions on emotions. And that's one of those things that you're going to have to stop if you want to build wealth, especially in something like the stock market. But let me tell you why it's so difficult to actually be able to buy low and sell high. Because if you wanted to actually come in and buy here when prices are low, people will tell you that you lost your mind. People will tell you you're buying something into bankruptcy. People will tell you that you are a fool to buy something when it's down. But when you buy something off here, now everybody will tell you that you're buying the next big thing. You're buying the next hot thing because it's been booming and it's going to continue going up and up and up. But nothing can go straight up forever. Likewise, if you come and sell up here, if this is the time where you're taking profits, people will tell you you have paper hands. People will tell you that you're stupid to sell right before the big boom. People will tell you that you're dumb for taking profits before we really saw the big gains. See, it's this big psychological game now because of the internet that people want to justify their investment decisions based off of what's happening on Reddit, based off of what's happening in the social communities, based off of what's happening with news companies and other media companies. And this is where I want you to take a step back and remember, their investment decisions are not your investment decisions. It's your money, your decisions. Stop letting a random person on the internet or a random guy on YouTube telling you how to use your money. It's your money, your decisions, and I want you to be smart here, build that financial education, and understand what is your investment goals. Because there's a lot of people who say that they're investors or who say they want to be investors. But as soon as you get a little piece of bad news, you turn into a trader. Because now you hear something bad's happening, you see this thing that you purchased go down by 4, 5, 6%, you freak out, and then you sell because you got scared. But this is where you got to start cutting through the noise and remember, what is your goal as an investor? Because the first thing, what does it mean to be an investor? Well, if we look at it from a legal perspective, you got to be investing for at least a year, because the IRS tax code is going to tax you differently if you own an investment for more than a year versus less than a year. If you own an investment for less than a year, it's considered active income. This is ordinary gains, short-term capital gains. Versus if you own it for more than a year, it's considered more investment income and it's considered long-term capital gains. So if you own a stock for more than a year and you sell it for profit, you get long-term capital gains, lower tax rates. If you own a stock for less than a year and you sell it for profit, you pay ordinary tax rates. It's called short-term capital gains, because the IRS doesn't look at you like an investor. They look at you like a trader, somebody who has a job of trading stocks. So just from a legal tax perspective, you're not considered an investor unless you plan on at least owning your stock for a year. But now from a financial perspective, you want to hold on to your investment for a long time. A lot of investors don't think about, how can I sell this in 1 or 2 years as an investment. They're thinking about how can I hold this for a long time, because that's where you're going to see the big real growth. So we're talking about years, sometimes decades, to really see the big growth, because that's where you're going to make the most money. Now you might say, well, Jaspreet, if I have to own a stock forever, how do I make any money? Well, you can also make money through dividends. Because if a company starts to grow and it starts to make more money, they can also start to pay out bigger and bigger dividends, which means you can get paid without having to sell your investments. But you got to remember, it's a completely different mindset to think about, I want to own an investment for the long term versus I want to make a quick buck. And this is where you have to be the one to make that decision and understand what is your goal. Because if you want to invest in individual companies, which I recommend 98% of people should not be investing in individual companies, because you got to understand how to listen to earnings calls. You got to understand what is a 10K versus a 10Q. You got to know what's the cash flow statement, a balance sheet, and an income statement. You want to understand how to value the company and how to value the stock, which is great for 2% of people, but for 98% of people, they have no idea what that is, or they don't want to do that. And so then you're just picking random stocks, hoping that you're going to make money. But then you get bombarded with the media telling you that things are great or that things are crashing. And it's very easy now to get emotional. And so there's two parts to really investing your money. You got to have the financial aspect, but you also got to have the psychological aspect. Both of these are so important, because if you get caught up in the emotions of investing, well, you're going to fail. Because you're going to see these roller coasters happen, and then you're going to be the person that's selling low and buying high, which makes somebody else rich. And if you want to be the person that's making yourself rich, you have to understand the psychology and the financials, because investing is tough. If you enjoyed this clip and you want to continue your financial education journey, I have another video that I think you'll love. All you got to do is click that button right over there. And for those of you who want to stay up to date on the top finance and business news, you can join Market Briefs, my free financial newsletter, by clicking that button below. Thank you for watching, and I'll see you in the next one.